Aotearoa, and welcome to Friday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz. And today we lead with news of deliberate chaos being constructed in Washington, D.C., with a much higher prospect of a US federal government shutdown. Authorised funding expires later today, that's Friday US time. Financial risks are sharply elevated today, and markets are pricing these in. Elsewhere, US jobless claims fell sharply last week, and by more than can be accounted for by seasonal factors. There are now a bit less than 1.9 million people on these benefits. And the Philly Fed survey of factories in America's traditional Rust Belt turned very negative, the worst result since April 2023. Soft demand was behind this shift. Optimism about the future took a hit too. And the Kansas City Fed's equivalent survey in its region wasn't so negative, however, but it wasn't positive either. Optimism was a bit better there, however. American existing home sales in November rose, but to be fair, it is still stuck in the very low range it has had post-pandemic, which is even lower than the post-GFC range, and back to levels first seen in 1995. So the November rise, in that perspective, is kind of irrelevant, no matter what the industry peak body says. And the US Conference Board leading index tracking rose in November. Higher building permits, higher equity prices, rising average hours worked in manufacturing, and fewer initial jobless claims boosted the November result. But the December result will no doubt take a hit from the current Washington shenanigans. And the final estimate for US third quarter GDP raised the expansion to 3.1% and extending the good run they've had since mid-2022. The US economy delivered $29.4 trillion of economic activity in the past year, with an expansion of $1.4 trillion, the most ever. And that describes what is at risk from bad policy. Elsewhere, there were many other central bank rate reviews. In Japan, the Bank of Japan held its key short-term interest rate unchanged at 0.25%, keeping it at its highest level since 2008. That was what financial markets had expected. But the vote was split 8-1, with one board member wanting a 25 basis points increase. Essentially, they're waiting to see how destabilizing the incoming American administration will be. But the bank boss seems to have turned dovish in the circumstances, and that move turned markets. In Taiwan, they kept their policy rate unchanged at 2%. In the Philippines, they cut their rate by 25 basis points to 5.75%. In Sweden, they also cut by 25 basis points to 2.5%. In Norway, they held at 4.5%. In England, they held unchanged at 4.75% with a split 6-3 vote, with the dissenters wanting a cut. This is a pause as inflation starts to rise there again. In something of a surprise, Australian inflation expectations rose to 4.2% in December, ending their encouraging falls that started in September. This is not a result either the RBA or the Australian Treasury would have wanted. And container freight rates rose 8% last week, but to be fair, that was only because of a 26% rise in the China to US West Coast route and the 17% rise in the China to New York route, as traders raced to get ahead of impending tariffs. Other routes saw small declines. Bulk cargo rates fell another 7% last week to be less than half of what they were a year ago and back to levels last seen in July 2023. And many mineral commodities are retreating in price in expectation 2025 will be tough, with copper down 2%. The US Treasury 10-year yield is now just on 4.59% and up a very sharp 19 basis points from this time yesterday, as markets digested the Fed's move and the deliberate mess being created by the incoming president. And the price of gold will start today at $2,592 an ounce and down $42 from yesterday. Oil prices are down $2.50 to be just on $69.50 a barrel in the US, while the international Brent price is just under $73 a barrel. And the Kiwi dollar starts today at just on 56.5 US cents and down 60 basis points from yesterday. Against the Aussie, we're down 40 basis points to 90.3 Australian cents. Against the Euro, we're down 10 basis points at 54.5 Euro cents. That all means our trade-weighted index starts today at just on 67.1, be down another 25 basis points from yesterday at this time. And the Bitcoin price starts at $100,994 and down 3.1% from yesterday. Volatility over the past 24 hours has been high at plus or minus 3.1%. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again on Monday.